Analysts are gearing up for a tough earnings season as the economy has slowed and inflation remains stubborn. You can see their concern through changes to earnings estimates. This is something we've been talking about all day. I suspect we're going to continue to talk about it as well.
Yeah, so I'm tracking earnings estimates. Of course, the team at FactSet puts a lot of this work out. Hats to them. I know it's a lot, especially going into an earnings season. So a couple things I'm watching here. First, earnings estimates are sliding more than historical averages, according to data compiled by FactSet. They're noting that from September 30th to December 31st, S&P 500 earnings estimates for the fourth quarter have been cut by were cut by 6.5%. During the past 5 years, the average decline in earnings estimates during a quarter has been 2.5%. Looking out over 20 years, the average decline in earnings estimates during a quarter has been 3.8%. So what does it mean? It essentially means that analysts are growing a little more concern on how that fourth quarter will play out, a little bit more than history, as we potentially go into a recession at some point this year. Again, wildly unclear. Now, where are some of the biggest cuts coming sector-wise in the S&P 500? In order of biggest cuts, materials are seeing a lot of cuts. Consumer discretionary, the second on this list, no surprise there. We're seeing some warnings out this morning, of course, from Macy's and Lululemon, so analysts very concerned about that. And then communications as well, also seeing a large amount of earnings cuts. Now, there are some positives here, maybe not totally surprising. Energy. Now, energy was one of the top performing sectors last year in the S&P 500 as oil prices rose. So analysts still very bullish on the profit expectations or potential for energy plays. Also utilities getting some earnings upward boosts by analysts. Now, we're also looking at this chart as well as we look towards what may happen for the rest of this year. Earnings estimates for this year are also starting to fall. You can see that downtrend there that really began in early November, and it continues. I would bring up that perhaps it has not fallen enough, given what we are seeing out of some of these retailers out here this morning. But nonetheless, that downtrend is well intact for S&P 500 earnings estimates. Overall, my take is this: as I just been mentioning on a lot of these retail names, our earnings estimates, the cuts we have seen, really kitchen sink enough. Fab artwork by our team there. That is me in the kitchen looking for declining earnings estimates going right down the drain. We're seeing just the fact you see a Macy's, you see a Lululemon warning on profit estimates and sales suggests there could be a lot more misses out there, and maybe analysts have not taken estimates down enough, and maybe we will see more volatile stock trading like we're seeing in a Lululemon today.
Well, even when we hear more about what the health of the consumer is from the banks that report this week and start to get some insight into how they're looking at everything from debt to balances in some of their client accounts as well. And then just the type of spending that they're doing. We did see an upgrade this morning from KeyBank on Visa and MasterCard, which would actually tell you that they're doing a little bit more leaning perhaps into some of those credit services in this near term as well. And that perhaps there's strength for Visa and MasterCard, but the way that consumers are spending right now and the health of consumers is certainly now not even just moderating. There is this declining capacity in mind in terms of the sentiment and how much they're going to continue to spend in some of the discretionary categories.
And a little nugget real quickly, the JP Morgan team, Matt Boss, the longtime retail analyst there, met with Macy's after they put out this guidance. He noted that when they talked, they called out rising delinquencies on credit cards. So just a little nugget to pack away ahead of those bank earnings. I'm a little surprised with that Visa and MasterCard upgrade, but just something to watch as we get through the week.
Another thing to watch, loan loss provisions, right? And credit loss provisions as well in those bank earnings.